I thought it was amazing to have a presentation about the end of US exceptionalism and not mentioning end of trade wars, a certain precedent from an unnamed country, and put the framework all the way back to 2022, where some of these trends were actually starting. I think that was very, very helpful because for somebody who is mostly trafficking in global macro and EM, 2022 was a brutal year. It was when the 60-40 model fell completely apart. You lost in US fixed income, you lost in US equities, you lost in EM. So when you go back and look at over the last 15 years, where have you seen positive returns? Well, the only thing worse than EM local markets, which I agree with our previous speakers, probably where you have some of the best opportunities now, were actually US treasuries and EM equities. So you can say, well, it hasn't worked for 15 years. Why should it work for the next 15? Or you could say, actually, wait a minute, there could be value there. And I think that the dollar cycle has a lot to do with it. I mean, we have been trying to invest and make money for our investors over the last 13 and a half years, at least in our long-only side, against the headwind of the dollar. Just the fact that the dollar stops appreciating is a game changer for the global markets, I would say, so ex-US dollars. It means that you're lifting your hedges, you are collecting carry, and that means that for the first time in 3.5 years, we actually see investors coming back to an asset class that they had left.